What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. I'm excited to bring you today's guest. Been following him on Twitter for years. His name is Eric Barna. He's a futures trader and otherwise known on Twitter as Double Wide Capital. Today we talked about why Eric chose market profile as his tool of choice for day trading futures. Mostly day trades the E-Mini S&P. We went over his process on the charts, on how he uses market profile to trade futures, and all around just a bunch of trader talk. You're really going to enjoy today's show. Futures Radio Show is sponsored by CME Group, and in July, micro WTI futures are coming to CME. They will be 1/10 the size of the benchmark WTI futures and will provide traders with a new tool to fine-tune their exposure to crude oil markets and enhance their trading strategies in an efficient, more precise way. To learn more, go to activetrader.cmegroup.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 futures symbol RTY and micro E-Mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Eric, welcome to the show, my friend.
Hey, thanks for having me, Anthony. I'm fired up to be here.
I'm fired up to have you. You know, I've been following you on Twitter for so long now, and I'm so excited to get with you today on the show. We're going to talk a little bit about your background, then we're going to go to the charts. And, you know, it's funny, we talk to each other on Twitter a lot. I mean, this goes for a lot of the traders out there. It's, you know, FinTwit, as much as we like to make jokes about it, actually is a pretty tight community. I've made so many good friends on there, right? And, you know, this is the first time actually we've spoken, even though we've messaged a lot before, and I've watched a lot of your work over the years. Really a huge fan of everything you do, but I don't know really a ton about your background and how you even got involved in trading. So I think we just start there today. How did you get started in trading?
Yeah, this is you know, it's I've had a interesting adult life. I love it, and it's now at 57 years old, looking back on it, you know, I understand how graced I was, you know, with my life, even through everything. And so I'm a technology person. I'm a software developer. That was how I started my adult life. But I had always invested. Probably my first investment was IBM in 82, 83. And I was on Thinkorswim at the time, and just randomly, 2009, I was like, hey, you know, I'm gonna take a contract in ES. And I did. I made, I don't know, 2 points on it or something. I said, this is cool. You know, this is awesome. And from 09 to about 2015, I was actually using futures to hedge my my swing trades, and it worked out really well. And in 2015, the majority partners in the company I was working with decided, it was a small company, we were maybe 20 people at the time, but we're making good profit. It was very profitable for me to be involved in it, but they were getting up in age. They were 5-10 years older than I was. Decided it was time. It was time to realize what they've done, you know, over their life and cash out. And they sold the company in 2015. It wasn't Facebook go public money for me, but it was life-changing for me. And what I realized after the sell is how unique our company was. And my wife and I talked about it. And I told her, I said, you know, there's just no way. I'm either having to start another company that can relive the last 15 years, or I got to find something else to do. And that is when I really started focusing on futures. And I started with Jim Dalton, market profile, and Morad, which I know you're good buddies with. I love him. He is such a share, and I learned so much from him. And so I took a couple intensives with Jim Dalton. It was drinking from a fire hose, and it takes so long with market profile to catch all the nuances and how things work. And I kind of layer what Morad had taught, with volume profile and impulses, and developed how I trade today. And my wife was on board with me, just kind of stepping back and saying, hey, let's see, what's going to happen. And, it's kind of a unique situation for me in that, I wasn't coming from a situation where it was my next trade was going to pay the mortgage or the electric bill or something like that. So I could be very calm, and that really is what market profile has done with me is really allow me the patience to wait for the real opportunity instead of trying to find the opportunity every day. Today, you couldn't have picked a more perfect day for me to have this, because I've had one trade today. It's just we're in value and the market's not doing anything. I don't want to look for a trade, and I kind of joke on Twitter about it. It's probably I'd have better luck fishing today. And instead of fishing for trades, I'll put some food on the table. So that is where I'm at now. And like I said, it's kind of I still feel young, but in terms of technology, I'm old. So it's really difficult to jump on to something new in technology. I've done some contracts where for some fairly large companies where they have a project in mess, for example, and they need a triage, and they're looking for people for experience like me that have dealt with that. And but for the most part, it's I would say 99% of what I do is trading now. So
awesome. Thank you so much for sharing how you got your start. And, I'm a big fan of Morad and Jim Dalton. Both been on the show, know them both pretty well. I've learned a ton from both of them. I think that they are two of the best people that I know for the trading community. Hands down, both guys give so much. They're incredible people. And what I'm always interested in is why people choose market profile. I know we're going to go to the charts today. You said it was a perfect day, so I'm looking forward to see what you're looking at. But for me, I was an early adopter of market profile. I started using market profile right when I started. I don't use it as much anymore, but it's definitely a tool that I like. I like it a lot. I'm not as active intraday as much as I used to be. I'm more of a intraday to swing trader. I would call it kind of a hybrid of the two, but I still look at it from time to time. I like it for confirmation. I like seeing your work, Jim's work, Morad's work. I like seeing that, definitely for confirmation for me. But I go back to why choose that as your style, right? How did that come about?
Back in the 90s, I was with Window on Wall Street. I have programmed every indicator that everyone has on their screen at some point in this software. And what I like about market profile is I now trade, and if anything, it's calmed me down in my trading. And I'm chasing value now, not price. And it allows me to very quickly visualize. I am a I Obviously, if you're following market profile, you talk about bracket and you talk about trend. And right now, we're in brackets inside brackets, and so it allows me to know, okay, should I be chasing, should I be looking at value or should I be chasing price? If you're in a trend, um, you got to chase price, and value will catch up, in the trend. But if you're in a bracket, it's better to trade against value. And like I was saying about today, I'm looking to trade against I'm looking at my screen, by the way, that's when my eyes are going over. I'm looking to trade the upper ends of value back to the middle. I'm looking to trade the lower edge of value back to the middle instead of chasing price. We had that little break here, liquidation break over lunch, and I wasn't looking to short the ES. I was looking to buy the dip back to value, and that's what I did right before this. But that's, to me, it's added a calmness to me. So really what I'm doing is you have a market that is pretty random, and I'm just putting a structure around it. Sometimes it works. We trade probabilities, and we so I'm just layering that structure around it, and it fits my personality. It helps calm me down in trades, and the people that trade with me every day, that is kind of the joke that goes around. I'm the patient trader, so it's, I borrowed a lot from Morad as far as execution goes and how to take profit as your position gets into the money. And that helps with the patience as I wait for the profile to develop. It's kind of like a puzzle. You come into each day, you see where you open against previous value, if you're in a bracket or if you're in a trend. And as each period evolves during the day, you're picturing in your mind, what is this profile going to look like at the end of the day? And so for me, it just fits. And it's taken a while. Profile isn't one of those things that you can read Dalton's books, and even Dalton will probably tell you that what he described in Mind Over Markets and Markets in Profile, a lot of that isn't what's happening today. So every day it's a new clue to the puzzle of how the market is reacting. And what you should pay attention to, and what are what is that one level? You can sit there, with market profile. The beginner is marking previous high, previous low, previous week high, previous week low. Where did value form? And what you end up after you've used it for a while is you say, okay, you know what? All of that is great, but here is the ruling reason. This is what's got to happen for all of this to transpire, and it takes a while. You have to. I spent many hours just replaying profile after profile, after the market closes, to try to get those clues in, and So it's just my style. It fits the way that I like to look at the market. Does it work all the time? No,
Nothing does. Yeah.
And I think that is a big part of the trading, is to know. And like I said, I love Jim. I was in one of his intensives about 2 years ago. And there are times when he's doing, he does his pre-market, and then he has a chat during the day that he updates you. And there are times when even Jim goes, I don't understand this, so I'm going to do something else.
Yeah, he's a straight shooter, Jim. He doesn't.
Yeah.
That's why I love him so much, and I always look forward to having him back on the show. Every time I talk to him, it's just like sitting there watching a legend, talk about market profile and just markets in general. And two things that you said I think are extremely important. It makes you calm. It fits your personality. I mentioned a little bit as to why I started using market profile in the late 90s, because when we were in the pit, everyone was actually using it because you could actually mark it up. And I loved it when I was in and out all day long. And as I started to change my style a little bit, I felt it was making me too active. I still think it's a great product. I think it's a great tool, I should say. And it's funny, I went away from it because it didn't make me calm. But that's what makes markets, right? I mean, that's the difference. I mean, I like to look at your stuff. I like to look at, there's a whole list of people. I don't want to name everybody because I don't want to leave anybody out. But I still love looking at it, because it gives me great confirmation, and it gives me a great visualization of what's happening in the market. And I like to see those types of things to kind of see if it fits into what I'm looking at in my own style. But I think the way that you said it is just so important. And I think over the years, it's just grown to such an immensely popular tool. I mean, people write into my show all the time saying, Anthony, do more shows on market profile. And I'm always happy to, because so many traders are using it. And what I really love about it is that a lot of traders are using it different than even when I used it. I think that's great, because it's really evolved as a really, I think, great tool. But I want to go to the charts today, and I know that a lot of you that are listening in audio, Eric is actually going to take some screenshots of stuff. So if you're listening to this on audio and you don't want to go to YouTube to watch it on video, you can go to the post where this show is, wherever you're listening to it, and then I'll put a link in there and you could follow along. Because what I want to do, Eric, is I want to go to the charts, and I want you to show us how you actually use market profile.
Yeah.
Like I said, I've been following you for years on Twitter. We understand why you chose this tool for your trading. It fits your personality. It makes you calm. Now I'd like to see it. So traders, hang tight. We're going to be back in 45 seconds with charts here from Eric. Be right back.
Awesome.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated, and it takes time, except with TradeStation Crypto. Because we are not an exchange. We are a broker. You have access to multiple pools of liquidity, all in one platform, in one account, one way. Trade crypto your way. Plus, earn interest on your eligible cryptocurrencies. Get started in one click.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. Welcome back, traders. We now have charts up in front of us. Like I mentioned, if you're listening to this on audio only, you can go inside the post, whether you're listening on iTunes or on my site. I'm going to have a link for you to download all the charts that Eric goes over today, so you can follow along, or you can go back later and check them out. Now, Eric, we already talked about market profile is your tool of choice. That's what you like. But I want to know how your day sets up. I mean, walk us through how it gets to the point where you sit down, you look at the screens, market opens. Like you said, you have a 2-hour window and you're waiting for a setup. Walk us through all of it.
Yeah. So first thing I do every morning is I always look at the monthly, and I know it doesn't change much, but it just reinforces what I'm doing. And we've been in a strong trend up. We're one time framing up on the monthly, just meaning we're making higher highs, higher lows for 1, 2, 3, 4, 5, 6, 7 months to start June. And that just gives me, just reminds me that we're in a primary trend is bullish. And then I just relook at the weekly every morning, where this is a yearly profile on the weekly. And we're in a double distribution. We're in balance, on the weekly, really. You can call it, I'm using this entire area as kind of a balance all the way down to 4,000 with the weekly gap that we have down there. So that tells me, the intermediate, we're going back and forth, and to just be aware of that. And then I'll go to the daily. The volume profiles that you see on here are weeklies, and something that I took from Josh Schuler from Trade with Profile is to mark the trailing month HVN. And this isn't last month's HVN, it's just a rolling 20. And behind this is the trailing month or trailing week, which is just a trailing 5-day period. And so this is just going to put levels on my screen. I do have the 5, the 20, and the 50, and the year-to-date VWAP on there. It just gives me a visualization of, okay, you know what, we're just balancing. And then I'll switch over to market profile in the morning. I'll see what the overnight did. And, so we had on Monday, we had the big liquidation off the top of the bracket. And so I was looking for the overnight to kind of feed back down lower. We had some pretty significant areas down here at 90. It really, lately it's been on the 5. So 95, 90, 85, 80. And the bottom of this bracket here at 73.50. And we opened up, we had a little bit of a stop run going into the open, but we ended up opening in range, in value with what we would call in market profile against singles. And so we were in the lower distribution. I wasn't looking at much action today, and I was looking more for us to balance. So today would be a day where I'm looking, if we can get some rectangles out here. I had a crash right before this on Sierra Chart. I love Sierra Chart, by the way. But we had some volume up in here. We have a really poor low down below us that was tested overnight, the VPOC from Wednesday as well. And so what this is really telling me here, especially with the volume that we've been putting in lately, is that this is a lot of short-term money, and to respect the visual references as you trade. And opening in value, in range, or in range, in value, you're not looking for much. So what this tells me as I'm setting up my trading day is I want to trade outside in. I don't want to take a trade inside value from yesterday. I want to wait for the market to kind of extend out of value and trade back to the middle, trade back to this 4204. And this kind of sets up my day. I'm not looking for much today. It's not going to be, a 50 handle day, for me, with trades and size and everything else. it's going to what I call pay the electric bill type of trading day. So instead of keeping runners involved with my trades, I'm looking more to find levels back to the middle that I'm going to take, 4 points, 5 points, and be done with the trade and wait for another one to set up. The difference being on a day where you're breaking out a previous week range or something like that, where I want to be able to have a runner on, because I don't know, how the market is going to, I don't know how far the market is going to go on any one day. So I want to be able to participate in that. And, but today's setup is a day of don't expect much, don't force trades, let the trade work out, get below some value. You can see here in J period, which is the period 1 o'clock Central. We look below previous value. This was the poor lows from Thursday. It was responsive, once again. And it was a great trade, coming back into value. K period is kind of selling off now, but that kind of sets up my day. I don't have a really quick chart to show of a runner day, but there were runners back in April where I was, it was a Friday YOLO kind of day where, I was able to buy the open. I took off most of my profit at particular targets, but I held those runners, and I held them all the way through the close, from the open. And those runners were, they were 30, 40 points. And those days, those are my alpha days. These days today is, like I said, just pay the electric bill. Don't get in trouble. Don't get too offside on trades. And so this kind of sets up my day. This is my screen. I'm not going to be able to show all of it. We had a little bit of an issue because of my screen, but my trigger screen is a 4-tick Renko. I'm watching impulses. I'm looking for pullbacks into the impulse. And I match this to levels on my market profile. This is just a 5-minute as we're watching the day develop. This is Delta. This is my DOM that I can't really show the whole thing right now. I will on a screenshot. And so what I'm trying to do is find, if we break out of the initial balance in this case, and today I was looking more to short back into the middle. But if I was looking for a breakout trade, I'm watching the Renko when we get up to these levels. We had this impulse up, and if I'm confident that this is going to continue up, I'm looking to buy that first pullback for another impulse in the direction. So as I tell people I talk to every day, the market is impulses, pullbacks, impulses, and very rarely do I catch that first impulse up or down. I'm looking to catch that pullback into the impulse or the continuation into it. Once I hit that area, then I'm switching over to order flow. And again, I can't show everything just because of screen room for this show. But here in the lower left-hand corner is just the order book. It's just market history as the day. The red that you see there are offers and bids that are 300 plus. And I'm watching, if I want to buy, I want to see, I I want to see those bids fill in, and it's very easy, very visual for me to see the bid fill in as price moves up. That's what I want to do. That's how I get confidence in the trade, is I see the bids following the direction of the trade. These are footprints, just your standard footprint. This one is just a 5-minute look inside the bar, and this one is 30 minutes, which just shows me where each period finishes. It's a market profile, and but what I gain out of this is where was the most traded price, in this period, and you'll start seeing them stack up. These are excellent areas to look for shorts. This is where your most volume was traded. So they just all kind of help me get confident in the trade, and be patient with the trade. Let the runner work out, let the market, if it's going to take me out, it's going to take me out. I'm not going to get out because I thought a 3-point stop loss, was the reason that I should take this off.
So a few questions I wrote down. I know we're going to go into rapid fire after this, but I want to do like a kind of a really quick rapid fire with you, because I've got a bunch of questions I want to ask you about everything that you are showing us. First off, clean charts. I really like that. I mean, the analysis is pretty simple, right? I mean, you start with your monthly, and you work your way into, the shorter term stuff, into the market profile. So first off, how much does the monthly have an impact on your trading? Because you see one time framing higher, are you coming in already thinking to yourself, more likely than not, I'm going to be looking at long only? Or how much of an impact does it have on your decision?
Yeah, so the market's being fractal. The patterns that show up on the monthly, show up on the weekly, show up on the daily, show up, on the 5-minute down to your 4-tick Renko. And I've come to realize, I spend more time looking at the daily, obviously, but I want to know where the trend is, because what looks horrible on the daily is just a pullback in the monthly. It's just a pullback in the weekly. So it allows me to go, when you do get those pullbacks, you do get those liquidations, to say, hey, remember the primary on the weekly is up, the primary on the monthly is up. Don't get too involved on the short side. It doesn't mean I'm not going to take a short. And being a day trader, I'm taking shorts and longs, every day. But what it allows me to do is tell myself, hey, you know what? If monthly, weekly, and daily are all up, maybe we should be looking at shorts as scalps and looking at more structured trade, holding a runner, getting long. And so that's why I just kind of keep that in focus, just to remind me that a nice 20-point liquidation on the ES may be a better buying opportunity.
Yeah. I get it. And, I got a bunch more questions, so I want to go through all of these. And so the next thing that brings me to the quick follow-up for that would be position sizing. And when you have that, and I think you kind of answered that already, you said it would be scalps on the short side, and the long side you try and hold runners. If the longer term is supporting the long side like it is your position sizing larger on the long trades that you would take intraday versus smaller on the short?
It depends, and it's I'm a discretionary trader, and so if we're coming up to 1550 is your weekly high. If we failed miserably this week on it, so really wasn't a trade. But if Monday we were coming up and I was confident, we're going to the all-time high. We opened up below the weekly, and we come up into the weekly. And, the first thing you're going to see is you're going to see that stop run. And if, I'm not buying that breakout, I'm waiting for it to pull back. I want to see support on that weekly. And if we get support at that weekly high, I want to get big, because we're showing that we're breaking out of a very visual reference. You're going to bring in more players, at the weekly. And if they want to bring that up to the all-time high, up in the 30s, I want to be big size. Today, because we opened in value, in range, my sizing is smaller, and I'm not expecting much today. You're going to get, what we just experienced here, where you're eventually going to find that seller. And these are areas, this failure at the previous week high, and I ended up getting stopped out of my runner. By the way, I had a little bit of FOMO early. I should have waited for a little bit more of a pullback, and it stopped me out of my runner. That's where I want to get big. I don't want to get big, like today at 4204, 4206. I want to get big on the edges. And, if you're trading in the middle, there's a lot of noise, and you're going to get hurt. You're going to get upset. You're going to get frustrated. So I want to keep size small. So daily highs, weekly highs, monthly highs, all-time highs, those are places where I'm looking to get big. Whether it's a look above and fail or a look above and go, I want to have size on there because I know the market's going to move from here. Here, trading in previous day range, who knows? Who knows where we're going?
Merritt Black said it best on this show. He said the edges and the edges. I
love that. It really is.
I love that. And so a few more questions. You actually answered some that I had in there, but so you're trading both sides of the market. Your position size is changing based upon the look, the situation. I get that. That's discretionary. Most of us can really relate to that. Are you all in and all out of these positions? Are they scaling in, scaling out? How does that work?
It could be all in. If I'm really looking to scalp, it's all in and all out, and I'll set that in my mind. It's people who trade with me, they'll hear my frustration. It's not the frustration with my trade, it's the frustration with the market. It's just not doing anything, kind of like today. And it's there if I know, hey, look, I'm gonna take this visual reference. I'm looking for 3 points. I'm in, I'm out, done. If none of these references are exacting, and I don't want to say steal because he shared. But it really came from Morad in that, none of these levels, and they're just single lines on my chart, but really they are zones. And so what I like to do is, you can see it on this chart here a little bit better. These are just areas that I want to do business with the market. So, and I haven't been watching time and sales or anything right now, so I'm just going to give this as an example. We're coming up into this 4204 area. And I wouldn't short here just because we're in the middle of the diddle, and I don't want to take a trade here. But these zones are about a point wide. And so I'll take a scale. If I was looking to short here, I would add a first scale right at the bottom of the level, add some in at the in the middle, and then add some in at the top. And the stop is in this case would probably be 4208. just by the way the market is acted. I know I'm wrong. Really, VWAP is in the middle here. You really get over VWAP, you're probably out of this trade anyway. And the way I scale out is whatever my stop is. So let's say the stop is 2 points, 3 points. My first scale out will be whatever my stop is, and it'll be a small amount. And it's more of a psychology thing for me. I feel good about the trade now. I took a profit. It's going to calm me down. And these days, I'm looking for excuse me, anywhere from 4 to 6 points as a take profit and that's my main take profit. And by the time that's done, that trade is good. It's going to be at least a 1.5 hour for me. And then I have my runner, and I'm going to let my runner run. Sometimes I have to let the runner actually go against me on entry because I'm looking for, these consolidation zones to act as support or resistance for me. And, and again, people that trade with me have watched me with a runner where I've had a runner, go 8 points against what it was, and I'm just like, you know what? The market's not taking me out yet. And there was a trade in April that I had mentioned earlier where ultimately I just held it from the open. And there were times that runner was 10 points against whatever the high was at that time. But there was nothing to tell me to get out of that trade. And those, I guess that's a long way of saying is that I sell, if I'm long, I sell into the strength of the move and hopefully get that runner that is going to really give me, alpha on that trade. So long way of saying if my mindset at the time is today was just a scalping day. I'm all in and all out. If we're pushing the high, we get over the all-time high. I want to be more structured. I want to leave runners. I want to see how far this market's going to take me. I'm scaling in, I'm scaling out. If I happen to catch a trend day early, I'm taking profit as it goes up, but every pullback I'm adding into that and then scalping that runner, that add-on, at some, trying to at least scalping that runner a little bit higher, keeping that core position. And, every time I do that.
Yeah, trading around the core position. Yeah.
Yeah, and every time you do that, I have an Excel sheet that will tell me what my theoretical break even is on that runner. And it just kind of adds confidence to the trade because, if you scale in, I'm just going to throw out a number, 4,100 on that initial runner, and, and you're trading at 4,120 or 4,130, and you have been doing that just add-on scalp, keeping that core position. And you look at the Excel sheet and by the end of the day, you're going, wow, the market would have to tank 200 points before I broke even on this entire day, and so it just kind of gives you confidence to hold that runner for as long as possible.
No, Eric, thank you so much for sharing all this. A lot of information you share with us within your process. And like I said, there's a lot of charts here, but it's clean, it's consistent. I totally get the gist as to how you get to the point where you're going to take a trade. And what I learned about you today that I didn't really know was that your system is very structured and, like I said, very clean and organized, but you do use some discretion. You are discretionary.
Yeah.
I might be bigger here today. I might be smaller here today. Let me see what's happening in the environment. This should be all in and then all out. This should be a scale. This should be a runner. I mean, that to me is, that's really, I think when you become the level of trader that you are as you take time, that's something that just takes experience. I think a lot of people, when they start, they try to be discretionary, but I know, because I've done this exactly the way that you're talking about, so much of it resonates with me. There's still a structure to that discretionary style of trading, right? I mean, there's something that's putting you in that position the way you're trading it, and that's time, everybody. And as you can see, he goes through his process every day. And I, like I said, I love the fact that you share with all of that with us. But traders, we're going to take a quick break now. A real quick break. When we come back, we're going to do rapid fire with Eric. So hang tight. We'll be right back.
Get S&P 500 and NASDAQ 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-Mini options with TradeStation. Get a piece of the pie now.
Welcome back, traders. Eric, thanks for hanging tight through all this. Love
Absolutely.
that presentation. That was so cool, man. Thank you so much for sharing everything so far today. But we got rapid fire questions now if you're ready for those.
I'll try. Yeah, like I said, I'm a patient trader. I'm a slow trader. So we'll see what the rapid fire does to me.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. Eric, first question for you. What trader has had the greatest influence on your trading and why?
Oh, wow. There's actually two, actually three. Jim Dalton, Morad, and not too known in the futures community, Andy Grimes. His book, Art and Science of Technical Analysis, the chapters on trending impulses is awesome.
What was one of the hardest things for you as a trader to overcome in your trading?
Patience. It's especially day trading. You've got to be patient. Let that trade come to you, and you see it go away from you, and you're like, God, I got to jump on board. But just patience, letting the trade come to you.
How has your trading process evolved over the years?
I'm much more structured. I don't turn on my trading computer at 8:29 Central and see what I'm going to do. I'm looking at the overnight action. I'm trying to come into the market with is it risk on? Is it neutral? Is it risk off? And actually pre-plan the trades. Have a couple scenarios going to, if the market does this, almost the if then else scenario.
One attribute you believe every trader should have?
Persistence. God, man, you've certainly filled Twitter, and I loved it, of your trials, in the beginning, and Morad has certainly shared his trials in the beginning, and Tom Camfield, is the same. Is, if this is something you truly want to do, make sure you got your risk control on, and just be persistent. It's an ever changing. Every day is different. It's a very exciting thing to me to wake up every morning to the market, but it's always changing, and you're going to have those times that it just isn't working, and don't give up. Don't change to a new indicator because your system isn't working at that time, and just stay consistent, stay persistent. It'll come.
Favorite book about trading?
Actually, it's not a trading book. It's called The Chimp Paradox, and it talks about why people make bad decisions, and basically people that trade with me will tell you every now and then, I'll say, God, that was such a chimp trade. Why did I do that? And most of those books, Mark Douglas, who I didn't mention, is a big influence on my trading. I love Mark Douglas, and I know there are other psychologists out there. I really tune into Mark Douglas, and it's so most of my reading is psychology. Is not trading. But if I had to say, one book, the series from Jim Dalton are fabulous. And also Andy Grimes' book, Art and Science of Technical Analysis, got to read it.
Best piece of advice that you ever received about trading?
It's a family show, so I won't say it exactly how it was told to me, but basically take the effing loss. It's, realizing that trading is probabilities. You are going to have losses, and you have to minimize them. Don't hang on to that loss. Take your loss. If 4,100 was your original stop point, it better not be 40.90. 2 minutes later, because then it's going to go to 40.80, and just take the loss, move on, move away from the desk for a little bit, take a walk, whatever, come back to the market, see what happens.
If you could go back in time and give the younger you a piece of advice when you first started to trade, what would it be?
Same piece of advice. Take the effing loss. Don't hang on to it. And I'll try to keep this short, but people I help today, I love hearing. I had one person who first started trading futures and had tens of thousands of dollars worth of losses, and he emailed me and told me, you know what? 2 months with you and I'm almost made all those losses back. And and again, it just comes with just take the loss, man. They're going to happen. 2020, I was 68.7% right, and I was profitable. And just take the loss. Don't hang on.
Last question for today. If you had an elevator pitch me your edge in trading, what would you say?
You've heard me run over every segment. You think I can do a 30-second pitch? It really is market profile. It's watching the rhythm of the market and coming into the day saying, you know what? Buyers are getting a little bit ahead of themselves, so I'm looking, to counter this. It's watching that Renko chart, and I think Morad talks about the market being the waves, from the ocean, and it's just really watching it and paying attention. If you are going to day trade, you can't not be watching the market all day. It's a tiring day. I think you had Nick on and said, Nick, the UFC fighter, and he was saying that, trading some days, I'm more tired at the end of the day trading than I am working out or having a fight. Yeah. And it does get tiring, but if you're not watching that, if you're not seeing that, whether it's footprint, if it's DOM, if it's watching the impulses, if you're not constantly, you're going to miss something that you should have been watching, and it's going to get you in trouble. So,
yeah, I do some of my best work when I'm just watching. When I know I'm not trading, markets are slow. Like the other day, I was watching Ethereum. I have a position in it, but I wasn't trading it, and I was just noticing some things. I'm like, look at 40 days of this. I posted a chart of it, and it just is like, you have to be in tune with the market. You have to have that connection, because when something happens, to me, I feel like when you're watching it all the time, and when something does happen in the market, you're so much more present and in control of what to do. Yeah. I mean, I've been through so many different moves in these markets as you have, and you're just like, when all of a sudden the market gets really busy, you just feel like you are right in sync, man. Like nothing ever happened.
And that's something that, and I miss, and I was a thinkorswim trader for the longest time, and now I can't remember his name, but they used to have the guy from the pit, and I would have him playing in the background because we didn't have, at that time, I didn't have good tools to sit there and just watch when tempo picked up and stuff. Yeah. And I knew when it picked up.
Ben Lichtenstein?
Yes, that's who it was. And so there's some technology. I tried it out. I don't like it because it was ticks, but it would tick based on tempo, and you could actually visual or audio hear it, in audio. But if you're not, and you'll see it during the day. You'll see it on the DOM, on the footprint. Right now it's dead, but you get to certain levels, and all of a sudden tempo picks up. Volume starting to pick up, and that's an interesting area.
You can feel it.
You got to be there for it.
Yeah, you do. Well, this was awesome. Like I said, I feel like I've known you for years, and this is the first time we've ever spoken, and I just learned a ton from you. Respect all the work you do. You're a true gentleman on FinTwit, and you share just such great work. I highly recommend everybody follows you. Where can people follow you on Twitter, and share with us a website if you have one? The
Twitter is, I'm looking at it right now. Just got to make sure. Yeah, double wide cap. Kind of a fun handle, double wide capital. Being I'm in Texas and stuff, we're all backwoods rednecks, and we all live in double wides. So that's where that came from. But it's at double wide cap, CAP. And my website is in the profile.
Awesome. Like I said, this was a blast. Really appreciate your time. Thank you so much for coming on Futures Radio Show today.
Man, thank you so much for having me. It really, really was enjoyable, and I loved it. I feel like I made a new level, in my trading career, my new career, my second career. So I appreciate it, man.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.